If you like most traders, you're probably looking for a strategy that can help you maximize your profits while minimizing your risk. And let's face it, that's easier said than done. But what if I told you that I found a trading strategy that can do just that? A strategy that can help you achieve minimal risk and maximum reward. Just take a look at these backtesting results. I tested this strategy on the prices of Bitcoin, Ethereum and Dogecoin on a 3-minute time frame, and in 2023 it produced 28 signals, 26 of which were winners. By no means am I saying that the win ratio will always be 90%. It's impossible. All I'm saying is that the strategy has a massive potential and you should definitely try it out. By the way, traders, if you're looking to take your trading skills to the next level, TraderEdge is a must-have app that will help you get there fast. First of all, it has an easy-to-use backtester that gives all the information about any strategy. All you need to do is to set the initial account balance and the profit and loss per trade. Besides the backtester, TraderEdge has also got a forward simulator, a position size calculator, and a collection of the best indicators and strategies that have been proven to work. And for those of you who sign up right now, TraderEdge will grant access for free to their $100 backtesting guide and $270 course on how to build a profitable trading strategy. So yeah, this is definitely a great deal. Don't miss out, sign up for TraderEdge today. They have a 7-day free trial so you can try it risk-free. The link will be in the description below. Okay, now let's get back to our trading strategy. This strategy works super well on the cryptocurrency market. The best time frames are the 1, 3, 5 and 15 minutes. The setup includes 3 TradingView indicators. Let's add them one by one. The first one is called the Zones Detector by Kalahi. The main function of this tool is to identify supply and demand zones in the market. Those zones can be quite helpful, however that's not something we're going to need for our strategy. So access the indicator settings and disable the zones in the style section. As you can probably notice, these buy and sell signals are much different from signals issued by a regular indicator. You see, regular buy and sell indicators like a super trend or a chandelier exit alternate their signals. This means that after a signal to buy, there will always be a signal to sell. So if you, for example, miss the signal, you will have to wait for a new one which might appear when the trend is over. This indicator, on the other hand, can issue a lot of buy or sell signals in a row, which could be an advantage. For the second indicator, we will add a script called the mean reversion channel. Is this one created by Fareed Zulkifli. This indicator helps to identify strong and weak overbought and oversold levels. It consists of the channel, the mean reversion line, and the support and resistance lines. We will need to make some slight adjustments to the settings, so open the inputs and change the outer channel size multiplier from 2.415 to 2. Then hide some lines in the style section. When price approaches or enters the upper channel, this indicates overbought market conditions. Traders usually place sell orders around this area, which causes a price decline. When the price reaches the lower channel, this indicates oversold market conditions. A lot of traders close their trading positions, which no doubt results in a price reversal. But these price reversals aren't that strong in a heavily trending market. So when the market is, for example, in a strong uptrend, the price often keeps moving in the same direction after it has made such a pullback. The selling pressure is simply not that high to reverse the market completely. That's why a lot of retail traders who go against the prevailing sentiment, believing that the market is overbought or oversold, do not get a chance to make any profit at all. The price simply reverses and triggers their stop losses, leaving them confused. You want to be smarter than them. That's why I created the following strategy. By the way, there is still one piece missing. This piece is called the Smoothed Moving Average. Make sure you add this one right here. Its length will be set to 200. The Smoothed Moving Average compares recent prices to historical ones and makes sure they are weighed and considered equally. The calculation of this indicator does not reference a specific or fixed period, rather uses all available data in the series for analysis. This is a perfect indicator for determining the overall trend of the market. When the price is closed above the SMA, this signals an uptrend. Only long trades can be taken during this time. A downward trend is signaled when the price is closed below the SMA. Traders can only take short positions during this time. So how exactly should we use these indicators to find sniper entries? Here is the exact strategy. For a buy signal to be confirmed, the following must be met. First, the price and the channel must both be above the SMA. Second, the price must pull back into the lower channel. Right after the pullback, the indicator must print a signal to buy. That is the final confirmation. Open a long trade and set the stop loss below the recent swing low. Target 2 times the risk. Move the stop loss to the break-even price once you have made a quarter of the profit. For example, you risk 2% of the account balance per trade in order to profit 4. In this case, the quarter will be 1%. Once you've made it, adjust the stop loss to secure the trade. For a sell signal to be valid, the price and the mean reversion channel must both fall below the SMA. The price needs to approach the upper reversion channel. Right after that, the indicator must issue a sell signal. Set the stop loss above the recent swing high and target 2 times the risk. Just like with long trades, adjust the stop loss to the break-even level once you've made a quarter of the profit. Because of specific entry conditions, it is quite obvious that the strategy does not give a lot of valid entries. If you want to increase the number of them, you can make the following adjustments. First, make the mean reversion channel tighter. So instead of 2, set the multiplier to 1.5. You can change the SMA timeframe as well, which will also affect the number of signals. For example, if you're using the 3-minute chart, set the SMA timeframe to 15 minutes. Now let's see how many signals we can get. Obviously, these changes will lower the accuracy of the signals, but you can fix that by adding a volume or a secondary confirmation indicator to the chart. By the way, if you're looking for a good volume indicator, check out this video right here.